Hey, all of the fabulous people here in our Tax Goddess Facebook group. I am here today to talk to you about two major subjects. There's been a lot going on in the tax world, so I'm absolutely thrilled, as always, to be here with you guys. I believe that you guys are able to do comments down below, so if you have any questions, feel free to throw those questions here under the post, and I will try to answer them if I can here live today. So in the meantime, we have two main topics that I want to cover right off the bat. The first one, the coming recession. What is this bringing for business owners? What kind of tax management and cash flow strategies can you be using to ensure that you are surviving and hopefully thriving in the current economic environment? And then secondly, if you need to prepare your taxes by yourself, which for me is always a little bit of a, but if you have to, sometimes you just got to do what you got to do. So if you have to, what kinds of things should you be looking out for, making sure your do's and your don'ts for preparing your own tax return. So I want to start today with the recession side. Now, recession, of course, is a word. It gets thrown around. But the general overview of what I'm really trying to talk about here is we've got interest rates rising. We got the markets depressed, significantly depressed from where they were. We've seen a lot of layoffs in the tech industries. But of course, we are starting to see layoffs across the board, multiple different industries and arenas. So, these are all signs. These are all, what do I want to say? If you're running a business, 2023 is a fight, okay? We just kind of come out of COVID and things kind of went a little bit weird, a little bit strange. Many small businesses are seeing a drop off in demand as the global economy slows, and this can be really, really scary. Of course, we've got inflation and it's persistently high. We've got a tight labor market in the US, so finding help if you're searching for US help. Side note, if you can, start looking overseas. But guys, we're just getting bad news after bad news after bad news. All right. And there are a couple of things that I really, really want to make sure that you as business owners are aware of, that you know what is coming down the pipeline. Now, the first one, we have a significant worker classification change coming down the pipeline. Now, at the moment, they're talking about this happening in May of 2023. So 2 months from now, maybe even less than that, maybe even a month from now. We are not sure whether this is going to happen or not. Of course, at the moment, this is still a proposal. But effectively, what they're talking about, this is a new Department of Labor ruling that will have a significant impact on businesses of all sizes. This is not just big employers, guys. This is, you're a one-man shop and you hire one assistant, okay? This is small all the way up to the huge, giant companies. The Department of Labor rules are now impacting who is allowed. This new proposal will impact who is allowed to be an employee versus who is allowed to be an independent contractor. Now, the new definition will, of course, include many factors, but the most important, according to what we know, the most important factor will be whether or not a worker is integral to the business. Okay. And that is a huge departure from the way that this was previously written under the old Department of Labor rules that were last updated, I think it was March 28th of 2021. You still had, the 20-factor test. Do you control them? Do you tell them what to do? Do you provide them equipment? This kind of thing. Versus that would be an employee versus a contractor who shows up, does the job, leaves, and they get paid, and that's it. Okay. This is a big change because an integral part of your business with this new definition, many people have contractors, 1099 contractors, who are absolutely integral to their business, but they may still, under the old rules, they may still work with 15 different people. It just happens that this one 1099 contractor is an integral part of your business. Now, really, if the independent contractors providing services that contribute to the company's making, delivering of those products and services, this person may have to be now reported as an employee. Okay, it doesn't sound too bad on the cover here, but if you are changing somebody from a 1099 now to being reported as an employee, 1099 means that you do not have to pay self-employment taxes. You do not have to give them benefits. 1099 independent contractor. You do not have to pay them overtime. I mean, your rate is your rate. Your program project cost is your program project cost. As an employee, you as the employer must pay 7.5%, 7.65% of their wages in FICA and Medicare taxes to the federal government. You'll never see that money again. You may have unemployment benefits, worker compensation benefits. You may have to put them on health insurance plans. You may have to provide them with vacation days, paid day off days. They would have to follow any other rules that would specifically relate to your employees, your W-2 people. So this is a pretty big punch in the gut for a lot of small businesses, especially where, they're just starting up. They have 1 or 2 or 3 kind of part-time people. They're contractors under the current rules. If they are forced to become employees, in my honest opinion, this is probably going to put some businesses out of business. Okay. This is a very significant cost to an employer. And, I'm really, really hoping, I'm really voting in my mind that this, excuse me, you can see I'm even getting worked up about this, that this will not pass. Okay. But guys, I need you to keep your eyes open and I need you to be watching what's happening coming up here in May. Okay. Now, I'm sure, like everything else, a rule will get put into place. The courts will come out with court cases. Well, it doesn't apply to this. It doesn't apply to this, right? But that could take years. And in the meantime, the IRS does not look kindly on people that misclassify their workers. There are serious penalties and interest, payroll tax penalties. You may have to go back and pay payroll taxes that you should have collected, so out of your own pocket. There's some pretty nasty things that could be coming down the pipeline. Now, again, I'm going to bring up here, okay, this relates to U.S. contractors. Okay. So side note, if you didn't know, Tax Goddess also owns Tax Goddess International. We help people hire overseas help. So if you do have positions that can be filled by overseas workers, this may be a reason. I think we're actually going to see a lot of push to go digital and hire overseas. And of course, unfortunately, that will have the negative impact of removing jobs here from the US. So I'm really hoping, guys, fingers crossed, that this one does not pass, but they've been talking about this for multiple years. Okay. So something definitely as a business owner to keep your eyes open on. Now, the next one, if it passes, since last year, the Department of Labor has been considering a current change to the overtime rules. So if you do have W-2 employees, definitely make sure, again, you're watching these Department of Labor changes. They're proposing significant changes to the overtime rules. At the moment, salaried employees who do not supervise others and perform certain administrative tasks are not entitled to overtime if they work more than 40 hours a week and earn $35,568 per year. The Department of Labor could increase the salary limit to as much as $80,000 per year, might be lower than that. But either way, the looming rule means that any employees who make a determined higher salary would be entitled to overtime, which again, significant cost and expense for our business owners who are already struggling with everything they've had to fight through COVID and of course, coming into 2023. Now, we've got a couple more here. We've got non-compete agreements are going away. Non-compete agreements are going away. Okay, if your employment agreement has a clause that forbids an employee to work for a competitor within a certain geographical range, they leave your company. This practice has, in some states, been abolished or curtailed, but thanks to now a non-compete protection, we used to be able to do this. We used to be able to say, listen, if you worked in a CPA firm and you can't go down the street 2 blocks and work for another CPA firm, because of course, you're more likely to steal clients, to take clients or vendors or staff or whatever it is. This proposed rule, which will, the FTC, the Federal Trade Commission, has issued a proposed rule, and that proposed rule is likely to become finalized this year, disallowing the practice nationally. Basically meaning your staff can go anywhere they want and do anything they want, and you have no protection against it. Okay, so definitely be on the lookout for this. Guys, can you tell this is being a business owner is getting harder and harder by the minute? Okay, so a couple other things. I'm just going to cover the big picture here because I do want to get to the second part of do's and don'ts for tax season here. But Severance payments have now been curtailed. Okay, so no matter what a displeased former worker wants to say about you, you have less protection against negative responses. As far as the National Labor Relations Board has now ruled that they are tying severance payments to a terminated employee's silence is no longer allowed. Okay, meaning you can't pay somebody off to stay quiet if they're upset with you. I can see that one as good or bad, but yeah, these depending on the situation could be very bad as usual for our business owners. The last one, unions are easier to organize at the workplace. So severance payments aren't the only thing that the National Labor Relations Board has been up to. Earlier this year, the board allowed smaller groups of workers to form into micro unions, which effectively allow unions to represent a subset of workers at your place rather than having to go through and convince the entire workforce to unionize. So if you are in an area where unions are an issue or a concern, you definitely need to be looking at that National Labor Relations Board ruling that came out earlier this year. So guys, as a business owner, I know that it's just been like punch after punch after punch in a fight. As usual, tax goddess. Now, we don't come from a lot of the regulation side other than tax law. So our focus and our specialty is tax strategy. If you are looking for things like hiring overseas, if you are looking to get away from some of these rules, if you are looking to, of course, reduce your taxation, we would be happy to chat with you. You can reach out to our team at any time. Just go to taxgoddess.com and book a call with the team. So the second piece that I really want to cover today is specifically related to preparing taxes yourself this year, okay? Now, this has been a very interesting trend. So as a CPA myself, for years and years and years and years, I think I've been a CPA for almost 25 years, long time, but for a very long time, people would go to a professional, to a tax preparer, to a CPA to prepare their taxes because they didn't want to mess around with, what if I do it wrong, audit risks, if I put the wrong field, the wrong amount on the wrong box, these kinds of things. So for many, many years, people have very specifically gone to, your H&R Block or a CPA or whatever it is to make sure that your taxes were being filed properly. From that standpoint, this year for 2023, we are seeing a pretty big shift in that. A lot of people are now moving to your TurboTax online, grab the box from the shelf and fill out your taxes. So some do's and some don'ts here. Okay, so do make sure that you're working with a qualified software. Okay, so TurboTax is a huge one. There's 5 or 6 others out there, but make sure that you're working with a big name. Make sure that they are well recognized. It's not some weird software that you found online in some strange part of the internet. Okay, use a big name. You definitely want to see if they have any kind of audit protection or audit support. So can you purchase, there's $79 for the year audit protection, something like that, that if there's a problem, they will come in, they will represent you, they will help you, okay? And of course, do number 3 is make sure that you have all of your receipts and records prepared with you in a single folder or however you organize them before you start to prepare your tax return. Those softwares are typically pretty good, especially for, a single individual married, you've got a W-2, maybe 1 rental property or a very small micro business. They're typically pretty good at asking you questions, but a lot of the time, they're asking you the generic questions and not the detailed specific questions that somebody like a tax strategist would ask. So if you have a business that is making more than about $50,000 a year in gross revenue, I would highly recommend that you work with a professional, whether that's a CPA, sorry guys, whether that's a CPA or an EA or a tax preparer, whoever that is, anything more than about $50,000 on a small business, I would recommend that you work with a professional. Now, your don'ts here, okay? Please don't lie. Don't make up stuff. Just don't, okay? That's effectively an automatic red flag for the IRS if they catch something out of whack or the numbers are weird, especially in comparison to the previous year. They do look at trends in history, so don't lie, okay? The second one is don't put down round numbers unless something was actually a round number. So if you paid exactly $300 to buy your new phone, put down $300, okay? But if you paid $299 and 23 cents. Do not round it up to 300. Put down 2.99. Okay. The computer systems trigger when there's too many round numbers. Now, Shauna, what is too many round numbers? What does that look like? Really depends on the return. Okay. So really, you just don't want to have a lot of round numbers on the return. Third one, making guesses is not good, right? So not intentionally lying for sure, but sometimes, I don't know, my records aren't good, they're not clear. You want to have good, clear records. The most common place where we see this is actually with the mileage, somebody reporting mileage for a small business. I would highly recommend Mile IQ. Mile IQ is a fantastic program. It's pretty cheap, especially I think it's like $5 a month or something. Don't quote me on that, but I think it's like $5 a month or something. So especially if you're driving around, if your business especially relates to quite a bit of driving, you're a real estate agent or a mobile notary or something like that, where you're driving around a lot, go with a Mile IQ. It's super simple, super easy. On your phone, you just swipe left, swipe right, and that will automatically classify business versus personal, even to the point of medical and charity. So really, really like Mile IQ as a program. So guys, I am always here to try to bring you new news and new information. And I hope today's Facebook Live was super helpful for you. As always, if you have questions, we would love to answer questions. These questions today came from our FAQ page. So feel free to reach out, ask whatever questions you would like, and we would be more than happy to try to answer those for you here on the Facebook Live. So in the meantime, I hope everyone has a wonderful day. And if anyone has any questions, don't hesitate to reach out to the team and I. You can book an appointment if you are looking for tax strategy. Book an appointment with our team. We specialize in people taking home about $300,000 a year, plus paying at least $100,000 a year in taxes. So if you have any questions, don't hesitate to reach out. And in the meantime, I hope everyone has a wonderful weekend. We'll talk to you later. Bye.